Welcome to another bar walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over bar area 3. This is section A8. This is a remembering and understanding topic. Recall the objectives and components of required supplementary information other than management's discussion and analysis in the annual comprehensive financial report for state and local governments. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions. Now, it's been a little while since we've had a bar video. I kind of took a break for the past 6 months because I was working on other projects for the company, but now I am back making this. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And after you watch that, you're going to want to learn more, so make sure you also check out becoming a SuperfastCPA Pro member and purchasing the SuperfastCPA study materials, or you could just buy the total bundle, which will include both of those things. Now, as a reminder, we have 5 questions in this YouTube version of the video, but we also will have a 10-question version of the video that you can get access to by purchasing with SuperfastCPA. Now, it used to be a part of the Pro member bundle, but we are actually changing that in the near future, where it is going to be a part of the study materials because that makes more sense. Our study materials are our mini quizzes, our audio notes, our review notes, and now, eventually, they will also include the 10-question versions of these videos. Instead of being part of the Pro package, which is more about the strategies, it will be in the study materials. Now, again, that is not happening right away, but that is how you will be able to get the 10-question version access in the future, is again by purchasing the study materials or the total bundle. Now, again, it's been a little while, but let's go ahead and dive into this video to start going over the questions. All right, here we are at question 1. Let's just dive straight in. Now, something I always like to point out is to read the last sentence of the question first, if it's possible. Sometimes the whole question is in one sentence, but here you can see I've bolded what the actual question is, and that's a good strategy to use on exam day so that you know what you're actually dealing with. Read the last sentence of the question first. So let's do that here. Which of the following items is considered required supplementary information, or RSI, other than management's discussion and analysis, or MD&A? So which of the following is that, and what's the information up here? A state government is preparing its annual comprehensive financial report, or ACFR. Okay, so again, we're trying to figure out what the required supplementary information is here besides management's discussion and analysis. Now, if you know anything about this, then you might have an idea. We did in the previous video talk about one of these things, but it's been a while since I've posted a video, so you might not remember. So if you have any idea, go ahead and guess, but if not, that's okay. We're going to go straight to the answer and start learning here. All right, here we are. The answer is C, budgetary comparison information for the general fund. That is something that is required supplementary information that's not the MD&A. So let's go through the explanation. Required supplementary information, or RSI, other than MD&A is presented after the basic financial statements in the ACFR. One important example is budgetary comparison information for the general fund and for major special revenue funds that have legally adopted budgets. Okay, we just learned something key there. Required supplementary information includes budgetary comparison information. And what does the budgetary information have to include? It has to be for the general fund and for major special revenue funds that have legally adopted budgets. So we learned something key there. Let's keep going. Combining statements for non-major funds may also appear after the financial statements, but those are optional supplementary schedules rather than required supplementary information. Statistical schedules and introductory letters are separate parts of the ACFR and are not RSI. Okay, so we learned there MD&A is required supplementary information, and we learned that required supplementary information includes budgetary comparison information for the general fund and for major special revenue funds with legally adopted budgets. But we also learned one more thing there. So if you were looking through the different answers before, it was talking about combining statements for non-major funds. That is something that can appear as supplementary information, but it is optional supplementary information, not required supplementary information. So both of these can show up as supplemental information, but only the budgetary comparison information for the general fund and, for major special revenue funds would be required, whereas the combining statements for non-major funds would be optional. So we learned something there about required supplementary information. Let's keep going to the next question. All right, here we are at question 2. Again, let's read the last sentence of the question first. Which of the following is required? Okay, let's go to the beginning. A city presents budgetary comparison schedules for its general fund using a budgetary basis of accounting instead of GAAP. So again, which of the following is required? Do they have to omit actual results from the schedule? Do they have to convert the entire ACFR to budgetary basis? Do they have to provide a reconciliation to GAAP? Or do they have to present only the final amended budget? So again, they have a budgetary basis instead of GAAP. So out of these options, what is required? If you have a guess, that's great. If you want to pause and kind of think about this and come back when you're ready, then go ahead and do that. And when you are ready, let's go ahead and take a look at the answer together. All right, here we are. The answer is C, provide a reconciliation to GAAP. And by the way, if you have watched the previous video, which again I made like 6 months ago, this is something that we learned in that video. Budgetary comparison schedules can be presented using GAAP, the government's budgetary basis, or another basis used for budgeting purposes. However, if the schedule is not prepared using GAAP, the government must provide a reconciliation explaining the differences between the budgetary amounts and the GAAP amounts. So they can use something besides GAAP, but they have to have a reconciliation to GAAP if they didn't use GAAP. These schedules normally include the original budget, the final amended budget, and the actual results. Governments also explain significant variances between the original and final budget and between the final budget and the actual results. So we learned something more about budgetary comparison schedules there. We learned that if they're not prepared on GAAP, then they have to have a reconciliation to GAAP, and we learned that the schedules usually have something for the original budget, the final amended budget, and the actual results, and that they show the variances between the original and the final and the actual. So again, we're learning a lot just from going over a couple questions. Now let's go to the next question to learn some more. All right, here we are at question 3. Let's dive in. Again, we always read the last sentence first. Which of the following is true? Okay, let's go to the beginning. A local government uses the modified approach for eligible infrastructure assets such as roads and bridges. So again, which of the following is true? A, the infrastructure assets must still be depreciated each year. B, the government may avoid depreciation if it maintains the assets at a set condition level. C, the government must record impairment losses instead of maintenance costs. Or D, the modified approach may only be used for buildings and equipment. Now, we haven't really learned about this from the other questions. If you know anything about this, then go ahead and pause the video and give it a guess or try to figure out what the right answer is. But if you have no idea what this is talking about, you have no idea what the modified approach is or what eligible infrastructure assets are, that's okay. We are using these questions to learn. So again, pause the video if you want to, and when you're ready, come back, we'll look at the answer together. All right, here we are. The answer is B. The government may avoid depreciation if it maintains the assets at a set condition level. So we're learning something about the modified approach here. Let's go ahead and look at the explanation. Under the modified approach, governments do not depreciate eligible infrastructure assets if they can demonstrate that the assets are being preserved at or above a condition level established by the government. So they don't have to have depreciation for certain assets if they can show that they're maintaining it. Instead of recording depreciation expense, the government must show that it is properly maintaining the infrastructure through ongoing preservation and maintenance efforts. This approach is commonly associated with long-lived or long-lived infrastructure assets such as roads, highways, and bridges. Okay, so again, we learned what the modified approach is there for governments. It's the fact that they can have something like a bridge or a highway or a road, and they don't have to depreciate it as long as they can show that they are maintaining it at a certain level. So we learned something new there. Let's go to the next question. All right, here we are at question 4. Let's go to the last sentence of the question. Which of the following information must be included as required supplementary information? And let's go to the beginning. A government uses the modified approach for infrastructure assets. Okay, we just learned a little bit about infrastructure assets or the modified approach. So which of the following information must be included as required supplementary information? Okay, let's go through this. Is it option A, 5 years of assessed condition information and estimated maintenance amounts? Is it B, 10 years of depreciation expense by infrastructure category? Is it C, fair value estimates of infrastructure assets? Or is it D, future projected repair costs for the next 10 years? So we didn't really learn anything about this in the previous question, but we know that the modified approach makes it so that they don't have to record depreciation. So think about this. Maybe pause the video and give it a guess if you want to. And when you're ready, come back. We'll look at the answer together. All right, here we are at the answer. The answer is A, 5 years of assessed condition information and estimated maintenance amounts. That is something that is required supplementary information when it comes to infrastructure assets. Let's go through the explanation. When a government uses the modified approach, which again means that they don't have to depreciate it if they can show that they're maintaining it, additional required supplementary information must be presented because depreciation is not being recorded. The government must provide the assessed condition of the infrastructure assets for each of the past 5 years and the estimated annual amount needed to maintain and preserve those assets for each of the past 5 years. The government must also explain how condition is measured and disclose the condition level it intends to maintain. This information helps users evaluate whether the government is actually maintaining the infrastructure at the level it claims. So part of required supplementary information when it comes to infrastructure assets is they have to provide how they're getting the assessed condition of the infrastructure assets. They have to provide the estimated annual amount needed to maintain them, and they have to disclose how they're measuring that condition. So that is part of required supplementary information, and this is part of something that is not budgetary comparison schedules. This is for infrastructure assets, which those two things together are part of required supplementary information besides the MD&A. Okay, now let's go to the next question. All right, here we are at question 5. Which of the following statements about pension-related required supplementary information for state and local governments is most accurate? Okay, this is something that we haven't covered yet in this video. We've covered stuff for budgetary comparison schedules and for infrastructure assets, but we haven't covered pension-related supplementary information. So let's go over this and learn something new. First, there's option A, pension RSI is only required for the current year. B, pension RSI must always present exactly 10 years of information. C, pension RSI is presented before the basic financial statements. Or D, pension RSI may include a schedule of actuarially determined contributions. Okay, so again, you may not know any of this, but if you have a guess or if you want to kind of think about this, go ahead and pause the video and come back when you're ready and we'll look at the answer together. All right, here we are. The answer is D. Pension RSI may include a schedule of actuarially determined contributions. So we're going to learn about pension-related RSI here. Let's dive into the explanation. Pension-related required supplementary information often includes schedules such as the Schedule of Actuarially Determined Contributions. Governments generally present pension RSI, so anything in pension RSI, not just the actuarially determined contributions, for the past 10 years so users can evaluate trends over time. However, if the government or pension plan has existed for less than 10 years, only the years available are required. For example, a pension plan that has existed for 6 years would present 6 years of information instead of a full 10 years because they don't have information for those other 4 years. Like other required supplementary information besides the MD&A, pension RSI is presented after the basic financial statements in the ACFR. So in one question, we just learned quite a few things. We learned that as part of pension-related RSI, schedules of actuarially determined contributions can be part of that. Next, we also learned that governments have to present the past 10 years of this RSI information for most of the supplementary information when it comes to pension-related RSI. We also learned that if you have it for less than 10 years, then it only goes to how long it's existed. And then finally, this is kind of a key thing that we haven't really talked about. MD&A, which is required supplementary information, apparently goes before the basic financial statements, but the rest of the required supplementary information goes after the basic financial statements in the ACFR. So again, in just one question, we learned multiple things, and that's why you go through the questions to learn the material, because all these little bits of information are right there in the questions, and you can learn most, if not all, of what you need to know for the exams just by doing the questions. Now with that, we've gone over the first 5 questions. Before we do anything else, let's do one more part of the Superfast CPA process, which is called pillar topics. Now, as a reminder, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. You've seen 2 or 3 or 4 questions with the same concept or teaching the same idea, and so you pull that idea out, you pull that pillar topic out so that you can know what you were supposed to learn from the questions. So that's what we're going to do now. We're going to go ahead and look at the pillar topics. All right, here we are at the pillar topics. Again, the whole idea behind these is pulling out the key information we just learned from the questions and kind of summarizing it, kind of having it all right here so that we know what we're supposed to know. So let's go through these. First, required supplementary information, or RSI, other than MD&A comes after the financial statements in the ACFR. We just barely learned that at the very end. Combining statements for non-major funds can also come after the financial statements, but those are optional supplementary schedules rather than required RSI. Okay, next, budgetary comparison schedules can use GAAP, the government's budgetary basis, or another basis used for budgeting. If the schedule is not prepared using GAAP, the government must include a reconciliation back to GAAP. Next is under the modified approach, governments do not depreciate certain infrastructure assets, such as roads and bridges, if they can show they are keeping those assets maintained at a certain condition level. Next is when the modified approach is used, the government must include additional RSI showing the condition of the infrastructure assets and the estimated amounts needed to maintain them for each of the past 5 years. the government must also explain how condition is measured and the condition level it plans to maintain. Finally, pension-related RSI is usually shown for the past 10 years and can include schedules such as actuarially determined contributions. However, if the pension plan has existed for less than 10 years, the government only reports the years available. So we learned throughout this that there's essentially 3 areas of required supplementary information other than the MD&A. There's the budgetary comparison schedules, there's the infrastructure assets, and there's information about pensions. So those are the typical 3 categories besides MD&A when it comes to required supplementary information. And again, we pulled out a lot of information just from 5 questions, and that is why you use the questions as your main learning tool. Now, that is the end of the 5-question version of this video on YouTube, but just remember, if you purchase our study bundle or any of our study materials, or the total bundle, which includes the study materials and the pro course, then you will get access to the full versions of these videos, which have 10 questions, so that you can get a little bit more help and a little bit more understanding and practice. So again, if you like this, make sure you check out buying our study materials, or the best deal is our total bundle, which includes the pro course. The pro course explains in depth how to study for the CPA exam, every single piece of the process and how you can do it without wasting months or even years of your time. And the easiest way to get introduced to all of this is to go to our SuperfastCPA training webinar on SuperfastCPA.com. That is a free 1-hour webinar where we will teach you the key ingredients to passing the CPA exam. And then again, that will give you a better idea and give you a better path to learning about becoming a pro member or purchasing our study bundle and potentially getting access to these 10-question version videos. Now, with all that said, thank you for watching this video. I hope this was helpful, and I will see you in the next one.